Real estate, stock market. Which is best? Imagine this. Two friends each have $0. One buys a rental property. The other invests in the stock market. 10 years later, who is richer? The answer might surprise you. For decades, Americans have debated one of the biggest wealth-building questions. Real estate or stocks, both have created millionaires. Both have risks, and both can help you achieve financial freedom. Today, we'll compare these two powerful investment vehicles and discover which one may be the better choice for you. 1. The power of real estate. Let us start with real estate. Real estate is something you can see, touch, and control. Whether it is a rental home, apartment, or commercial property, real estate offers several advantages. First, it generates monthly cash flow through rent. Second, property values often appreciate over time. Third, investors can use leverage. With a 20% down payment, you can control a much larger asset using a mortgage. For example, if you buy a $0 property with $0 down and the property's value increases by 20%, you've gained $0 on your original investment. That's the power of leverage. However, real estate isn't perfect. Properties require maintenance, repairs, insurance, taxes, and sometimes difficult tenants. Selling a property can take weeks or even months. In other words, real estate is not very liquid. 2. The power of the stock market. Now let us talk about stocks. The stock market allows you to own pieces of some of the world's greatest companies. Think about companies like Apple Inc., Microsoft Corporation, or Nvidia Corporation. Historically, the U.S. stock market has delivered strong long-term returns, averaging around 10% annually over many decades. One of the biggest advantages is simplicity. You can invest from your phone in minutes. Stocks are highly liquid. If you need money, you can usually sell your investments instantly during market hours. There are no tenants, no repairs, and no midnight phone calls about broken plumbing. The downside: stock prices can be volatile. Markets can fall 20%, 30%, or even 50% during major crashes. Investors must control their emotions and stay focused on the long term. 3. Comparing the two. So which investment wins? Let us compare them. Cash flow. Real estate often wins. Liquidity. Stocks win. Ease of management. Stocks win. Leverage. Real estate wins. Diversification. Stocks win. Control. Real estate wins. The truth is that neither investment is perfect. The best choice depends on your goals, risk tolerance, and lifestyle. If you enjoy managing properties and want steady rental income, real estate may be attractive. If you prefer passive investing and maximum flexibility, stocks may be a better fit. Here's the secret that many wealthy Americans already know. The richest investors often don't choose between real estate and stocks. They own both. Real estate can provide income and leverage. Stocks can provide growth and diversification. Together, they create a powerful wealth-building strategy. So instead of asking, which is better, ask yourself, how can I use both to build lasting wealth? Because the ultimate goal isn't to win an argument. The ultimate goal is financial freedom. And whether you build it through rental properties, stocks, or a combination of both, the most important step is simple. This video only education purpose. Before any investment, advise your finance advisor. Please subscribe this video for more